with obvious size differences begging the question about this country's relevance within BRICS. Particularly interesting then is the nature of the relationship between South Africa and the largest and most powerful player in the bloc, China. Lucy Corkin is country risk analyst at RMB and Annabelle Bishop is chief economist at Investec. Welcome, good to have you both here. Lucy, if we were to start with the nature of the relationship between South Africa and China, China introducing a whole new leadership structure, how would you describe that relationship? Is it a hugely uneven and distorted relationship?
Well, obviously, if you're looking at the size of the economies, then I would say yes. But I think what South Africa can gain from this partnership is essentially leveraging this position that they now have, that they're in the BRICS bloc, in terms of projecting an international image that punches far above its weight than it ordinarily would. And this is historically something that South Africa has been trying to do since 1994. So there are obvious benefits for South Africa in this partnership. I think the key is actually trying to leverage this in a way that South Africa isn't taken advantage of, given the relative size to the other partners.
So that's the risk that you're referring to.
Absolutely.
The benefits, but there are also risks, like some careful management required.
Indeed, indeed.
Annabelle, your views on that?
Yeah, I think it's very clear that we're not in the top 10 economies globally, and Brazil, China and India are. And I think, the real concern is, will South Africa be bullied if it does not actually have equal contribution and participation, therefore, in institutions that are being thought of at the moment, such as the BRICS Development Bank and particularly the Reserve institution as well. They're looking at to try and create a certain level of liquidity of reserves that countries can draw on in times of crisis. So I think those are some of the concerns, but I think the reality is that South Africa is now in the BRICS. So I think that perhaps needs to stop questioning its position and, as Lucy says, try and do something positive about it. In particular, it does give us access to greater borrowing and potentially to use for our infrastructure. So from those points of view, there can be significant benefits, and obviously South Africa needs to be careful in its negotiations to make sure that the new access to markets that we do get obviously are beneficial for us. We don't want to be getting greater access for raw materials and seeing our manufacturing industry decline. We want to try and get greater markets for that as well.
So Lucy, in negotiating the future nature of our economic ties with China, what are the elements we should be looking out for in terms of trade relationships, trade restraints or import quotas and so on between the economies? What would you suggest for those negotiators?
Well, I think we're already actually seeing some of almost a shift in perspective in terms of negotiating with China. In March, there was a deal negotiated between Transnet and the China Development Bank. So China Development Bank would actually be putting up about $5 billion worth of capital for Transnet's big recapitalization program. And this is actually going to focus specifically on the localization of manufacturing of equipment and locomotives. Now, this is very, very different from some of the other deals that you're seeing across the African continent, where the locomotives are just shipped wholesale from China with no actual local beneficiation. I think we did definitely learn some lessons in terms of what happened after the expiration of the multi-fiber agreement in 2005 and the subsequent collapse of our textile industry. So hopefully going forward, we can actually look at how we can get some kind of benefit from these kinds of trade relations with China.
And the BRICS Development Bank, so much has been said about that, Greg, and also the fact that at this stage, certainly no details. What role could South Africa play within this BRICS Development Bank? We spoke about the size difference, Lucy and Annabelle. So if we were to make a contribution, the capital and the liquidity to this development bank, what sort of size contribution can we make in the context of China?
I think currently what is on the table is that all the partners are actually going to contribute the same amount. The number that's been bandied about is about $10 billion, which is considerable for South Africa, not so much for China. I think the issue here is actually getting a kind of equality within the partnerships, which is possibly nominal in name. I know that China was actually asking to have double that number. They wanted 100 billion seed capital to start off with, which is obviously possibly way beyond what South Africa can deal with at the moment. I think what South Africa has to do is actually leverage a kind of relationship whereby, particularly in terms of steering the financing towards infrastructure development across the continent, particularly with the NEPAD seat in South Africa, there's been a lot of work done on trans-regional projects, and obviously that would be a great place to start in terms of the kind of advisory role that South Africa can play in that capacity.
And Annabelle, you see that also in the PRC and its investment priorities for South Africa and for the continent. So a huge checkbook available for investments out of the PRC into Africa infrastructure projects. So presumably this is positive for South African growth and South African infrastructural development too.
It is, but I think, South Africa's infrastructure problems perhaps are not so much financing, and indeed we actually see monies being returned unspent in the budget in South Africa, and more so, and obviously, perhaps we're talking now about government infrastructure as opposed to parastatals, which I think is separate, and I'll address that just now. But in terms of infrastructure happening in government, we often are finding the situations where there's not the managerial capacity to actually pass these plans that are being brought and get these projects underway. In terms of the parastatal front, that's where we certainly need funding, particularly in the Eskom Transnet spaces. So I think, we have obviously gone to the World Bank for funding from Eskom, but I think some of the concerns have been that we are not getting away from coal-fired power stations, and we're obviously, not moving quick enough to more environmentally friendly ones, and that has hamstrung some of our funding.
Greg, does this nature of this relationship between South Africa and China and South Africa within BRICS, does it in any way drive your stock selection process, or is this a long-term structural element?
I think it's long-term structural, but one would have to, if you put together a development bank that is really controlled by the BRICS countries, who ultimately will wield the most influence. Because at the end of the day, you don't want the major power players dictating to you, and at the end of the day, it's all the question of the allocation of capital. But at the same time, many years ago, you used to, if you wanted to build a railway network, well, you would call for tenders, and then you would have to find the finance. These days, it comes as one package, so whoever gets a tender arranges the finance. So I think it's a worry that some of the major players or one of the major players in the BRICS wields an undue influence, I think, on South Africa, and particularly it's been proven in the past in our foreign policy as well. So I think that's a concern.
And Derek, also you could say China's playing an undue role in the global economy. In fact, if we go back to what happened on Monday, it was the announcement of lower than expected growth out of China, 7.7%, that triggered this decline in the market.
Yeah, exactly. And I think that there's been a lot of emphasis and influence that's been placed in the East, and particularly on China right now, in terms of delivering those growth numbers. So, a slight disappointment there, and you can see the knee-jerk reaction that it has, and the follow-on effect it has in the market. So it worries me that it's becoming a little bit too weighted to the Chinese side, and too much reliance has been put on the shoulders of the Chinese. But in the bigger picture, if you look at the infrastructural investment that can take place and how the BRICS as a whole can benefit from the influence of someone like China, I do think that we all go hand in hand. At any one point, China's going to need commodities. We sit on very good raw materials. We need the infrastructure to deliver that, and for them to deliver growth of 8%, which is what they expected, then they're going to need to grow, and they're going to need that raw material. So it all works hand in hand. As long as the growth is managed accordingly and on a conservative basis, delivering growth consistently looking forward.
Lucy, the Chinese authorities have a good track record on that, consistent growth delivery, very long-term planning there.
Absolutely, but I think also some of the slowing down that we're seeing in the past couple of quarters is actually, in a way, part of the plan, because China's at the moment actually going through a huge rebalancing exercise in terms of their economy. They're trying specifically to shift away from very investment-led growth, because a lot of those sectors are actually sort of overcapacity, particularly in your heavy industries. They're looking towards bringing the pricing of their electricity and their power towards more market-driven levels, as opposed to the subsidized nature that we've seen previously. And this will actually have a huge impact on the economy in the short term, which, unfortunately, if Monday is anything to go by, is going to have quite a negative impact on the global economy in the short term. But in the long term, this is actually required in order to see a much more sustained level of growth in China, and to go much more towards the kind of consumer-driven growth that they're looking for, and getting away from those overheated areas of the economy, particularly in terms of the property bubble that is showing signs of developing in China, and we don't want to see a repeat of what we saw in the States in 2008.
Yeah. Annabelle, shifting slightly, speaking about China's growth prospects and current growth performance, your latest thinking on South Africa's growth prospects. We had the IMF World Economic Outlook and revisions to growth forecasts, South Africa dragging down African growth.
Yes, I think China and South Africa have different problems. You know, China has really become a factory that's too big for the world, given the global slowdown. And we are seeing deindustrialization at such a pace that our manufacturing sector is shrinking, you know, very rapidly. And obviously we're seeing substantial job loss, and we're also seeing problems in the mining sector as well. Our services industry continues to grow quite rapidly. And, you know, really it's partly by default the shrinking production side, but also because there is strong demand for services and retail in South Africa. I think, you know, China would clearly benefit by improving its services, particularly the production of healthcare, education, and, you know, that obviously really means, you know, greater income equality throughout the nation. I think you are seeing that by the increases in factory workers' wages, particularly. So, you know, for South Africa, the downward revision is probably concerning because,
Yes.
you know, by the IMF, because it really indicates, and I think this is something that's coming across even in the negativity towards our currencies and some of our equities, that there's been a bit of a rotation away from South Africa because our growth prospects are actually waning and compared to what's happening globally.